All right, morning guys. Welcome to the Canadian Mortgage Hangout. This is our third Hangout, Thursday kind of morning tradition we started here. So today we've got Jackson Middleton from Saskatoon, Saskatchewan.
Regina, Saskatchewan.
Sorry,
you
Regina.
Get that wrong.
I always say Saskatoon, don't I?
But it's okay because I deal with clients all across Saskatchewan, so we're good.
There we go.
That.
I got the province right. And
you're close. Yeah.
We've got Rob Campbell. He's from I know he's from Guelph. I never get that wrong. So welcome, Rob. Gordon McCallum's obviously on vacation. Must be nice. And myself, Scott Dawson, based in Vancouver, British Columbia. So today we're going to talk about. We've got some. We're going to kind of touch on more of the consumer side and answer some questions here. We do, as mortgage brokers, we get a lot of questions from clients. A lot of the deals we work on, obviously, are all different, right? But there's a lot of common questions I think we all get. So we want to kind of cover that this morning, get some feedback from the brokers here. First one, I guess we'll start with basically, I mean, a big one I always get, and I think you guys as well, is what services what does a mortgage broker provide to clients? So I'll let you guys kind of take off on that a little bit, and I'll give some feedback after you've started.
Yeah, no, I'll let me jump in on that because that's a very common question. I mean, especially kind of in Saskatchewan, where we're kind of very heavy bank driven and credit union driven. What is a mortgage broker and why is it different? And what I explain very simply to my clients is that when you walk into a bank, you're dealing with a banker who's paid a salary by the bank to make a bank money. Whereas as an independent mortgage professional, my job is to learn the products that various lending institutions that lend through the broker channel have to offer, figure out exactly where my client is coming from, and then make a match. So basically, as a broker, I'm a middleman. And I'm not representing one or the other. I basically, it's a lot, I don't know, you go for it, Scott. Talk about it.
No, I mean we kind of go over a lot of the same questions. I mean, the service we provide as a value, right? We don't have our, we don't have our loyalties to any one particular lender. So we can offer the client basically the best fit for what they're looking for their mortgage.
Yeah.
And if you want to add anything to that, Rob?
Rob's going to say yes.
I wholeheartedly agree with both Jackson and Scott. That is all.
We'll let him answer the next answer. We'll let him answer the next one. Obviously, when we're discussing with clients, they ask us, why they should use us. We go over the benefits of what the services we provide are. Once they understand that, the next question that usually comes is, how are we compensated for what we do? So I'll let Rob. Maybe you can start on that one.
Yeah. So how we're compensated would be for what's called a AAA mortgage, or for most people. We're paid what's called a finder's fee. So a broker is working with you, the client, on your behalf, but we get paid by a lender to place that business with them, and that's what's called a finder's fee. Now, when we get into situations where maybe there might be what's loosely called a subprime, but an alternative mortgage solution for the client, that maybe there's some credit history issues there, or some delinquencies on payments, or some tough times. Life happens and things happen, so you might need an alternative lending solution, or even a private mortgage, and then there might be a broker fee in there somewhere, only because generally private mortgages don't pay us directly to bring that business to them, so we have to charge for our time. But in general, we're paid what's called a finder's fee by the lender.
That's right, and I guess it's important to point out if there is ever going to be a fee charged to the client, whether it is a broker fee or a lender fee or both. In some cases, it's always obviously disclosed up front, and that a client is well aware of any and all fees involved prior to getting their mortgage. So there's not going to be any kind of surprises when they go to sign the paperwork at the lawyer that they're charged this exorbitant fee that they're not aware of. That's not going to be the case.
Absolutely, yeah. I mean that folks, for the people that are watching this that are consumers, you're going to have to sign a disclosure to borrower form that's going to outline those fees, and that's at that point is when you should see that fee there. If you don't see that fee there and you come up to the time of closing and then all of a sudden there's a curveball, you know, you need to investigate that a little deeper because that should have been disclosed to you quite a while ago.
Yeah, no, and I totally agree with you guys on that on the B side. Now, getting back to what Rob was saying about you know, the finder's fee on the, you know, your normal deal on your, you know, your straight deal. You know, I've been asked several times, well, why would the lender pay you a finder's fee? The lenders we typically deal with through the broker channel are more of your non-bricks and mortar type banking institution. They don't have bankers being paid a salary sitting and waiting for business to come in. They source their business primarily through the broker channel, sometimes exclusively through the broker channel, and they can, because they don't have people sitting down writing the business, they basically, it's a more efficient way because as a broker, we bring them business, they pay us a finder's fee. And I will add that a lot of the time the finder's fee is standardized, not only between lenders, but for different terms. So it's not like if we're going to one lender, we're going to be paid a little bit more. It's generally very standardized. Now, as brokers, we are incentivized to bring a certain amount of volume, but generally a good broker will just pass that savings on to their client, and it's more of a service expectation that we have of our lending partners, and we build our business on relationship.
Good points there, Jackson. Okay, another one. Obviously, once we've decided mortgage broker is the way we're going to go, we understand how we're compensated. A question I get a lot, and I think you guys, we talked already, you do get a lot, is one of the fees that some clients will see on their mortgage is mortgage default insurance fee. So whether that's coming from CMHC or Genworth. The question I'll get a lot, and I'm sure you guys do as well, is what does this cover? Why am I paying this insurance? Is it home insurance? What's that fee there for? I'll give that to you, Jackson.
Oh yeah, though that's yeah. The problem is it's called insurance, and most people consider insurance to be life insurance or home insurance. But really, when we're talking about Canadian Mortgage and Housing, or you know, Genworth or Canada Guarantee, what it is it's default insurance, and it's an insurance policy where I guess in Canada, if you don't have 20% down, your mortgage is considered high ratio. So if you do have 20% down, it's conventional, and the bank can take on the full risk of your mortgage. However, if you don't have 20% down, you're required to pay for an insurance policy that protects the lender against your default. So no, it's not life insurance. Not if you die, your mortgage is paid off. That's separate, and you know, a good broker can point you to an insurance professional that'll take care of that for you. And it's not your fire insurance. You got to get that as well. But it's what allows you to get into your property with less than 20% down. So typically, you know, for a first-time home buyer, you're putting down 5%, and you're way better off putting 5% down, because if standard appreciation on a property, you'll make up that. And I should note that the default insurance is a percentage of the mortgage amount. It's generally added into the mortgage, and it's not like money you have to come up with out of your pocket.
Anything to add there, Rob? No, you mentioned.
No, I think Jackson pretty much nailed it right on the.
You're being so good today. You're not talking at all.
Jackson and you have got it covered. Last week I flapped my gums way too much, so you guys, that's your time to shine here. But no, Jackson covered it off pretty well. I mean, there's a misconception with that little word insurance, where people say, no, I've got life insurance, I don't want to pay $8,000. Well, you know, the honest fact is, without CMHC or Genworth or Canada Guarantee, most of us wouldn't be able to afford to buy homes, period. So it's a necessity for most.
And we wouldn't have the, you know, low rates we have today as well. That is a big factor in there too. Continued low rates, you know. And
our economy wouldn't be as strong. I mean, if we didn't have it, yeah, I think we'd be in a way tougher spot. You know, you look at the global economy, we're not doing too bad.
No, exactly. All right, so one last question then, and we'll get Rob to maybe he can answer yes or no on this one almost. Lately, I mean, for my clients, they have been going more towards the fixed rates. Obviously, we've seen the discounts on variables disappear in the last, you know, 3 or 4 months. We used to be getting some great deals on variables. The spreads have obviously shrunk, and the fixed rates have been a lot more attractive. But you still do get the question, you know, what's the difference between a fixed rate and a variable, and what's better? What would you choose?
Okay, well, Coles notes what's the difference? The difference is how they're priced. The fixed rate mortgage market is priced off of the bond market, and the variable rate mortgage is priced off the prime rate of Canada. So which one should you choose? Well, this is like the age-old, like, what came first, the chicken or the egg? You know, there's always, everybody's got a different opinion, and it definitely depends on the client's risk tolerance. You, the viewer, how much risk you can take. If you get what I often say to my clients is, if you get an envelope in the mail saying, your rate's going up to this, are you going to jump out of your skin, or are you going to kind of go, well, okay, yeah, no, it's still low, and ride it out? If that first letter is going to show up and you're going to jump, you should probably be in the fixed, especially the way that fixed rate mortgages are priced currently. Even a year ago, I remember commenting about how crazy the discounts were on variable rate mortgages, and why would anybody take a fixed mortgage? And now I'm, personally, for most clients, I'm the opposite now. I'm fixed until the cows come home. But again, it definitely does come down to client's situation, their financial situation, their plans, their risk tolerance. Again, consulting a broker, talking with a broker, and going over your plans, your goals, your life plans would better determine which product's right for you.
Good points there. I think it's easy for people to go. Like, I find it's easy for people to go online, and they're kind of really rate focused, rate driven, right? They want the lowest rate. So it's important. Like, there's no such thing as a cookie cutter mortgage, and it's important. Obviously, you guys know this. To go over it with a client. Everybody's different, right? That's kind of where I come from as well. Rate's not the only thing to consider.
No, and yeah, let's tie this back into the initial question of what service does a broker provide, and it's the conversation in this, because when you're dealing with a straight banker who represents the bank has an agenda. They want you to take either a fixed or variable, so they're going to put in front of you, here you go, this is what's best for you. And generally, it's the 5-year posted fixed rate. And, well, hey, wait a minute, I think I can get a better rate at my broker. Oh, well, we'll match that. Why didn't you offer it in the first place? And the advantage of dealing with a broker is that we can go through and explain the fixed and the variable. I mean, to further to what Rob was saying, generally the variable rate is at a discount that's below the fixed rate. I mean, your rate is floating, so as the rate floats, it can go up or down. Now, historically, the variable rate, you'll save money. However, historically, we've never seen fixed rates this low. So when you're sitting on the bottom, when your economy is, rates are so low, and they've only got up to go, I question whether it's a good move to do a variable right now. But again, that's where it's not about us as the mortgage professional to say, hey, this is what you need. It's more about us saying, where's your risk tolerance? Rob was absolutely right. It's about getting to know people, getting to know if they get a letter in the mail that says, hey, prime's gone up 0.5 point and your mortgage payment's going to go up by $120. Can you afford that increase? Or would you rather lock in a certain rate for a certain amount of time, knowing that your payment will never change? Good
points. There we go. Well, I think that kind of sums up our the morning. We're going on here. We've been on about 15 minutes, close to. Cool. So we'll, unless you guys have anything to add, we can maybe wrap it up.
I just want to add that you guys are both wearing ties, and you look beautiful.
You look like that,
fantastic. Yeah, show off the ties. Fantastic. Yes. That's all I have to add.
And I want to add as well that you, Jackson, are beautiful as well. So you don't need a tie to...
yeah, no.
Maybe next week we can get Jackson in a tie.
No, it's something to do with like a 21-inch neck and dress shirts. Yeah, ties, no good. Ties like this short, I'm out. I'm flat out.
We'll send you a clip-on.
There you go.
All right. Well, thanks, guys. That's it. We'll touch base next week. Hopefully, we can maybe get a few questions from some viewers that have been looking, and we'll continue on. Always as awesome to chat with you guys. Jackson, I know you're on vacation, so have a good rest of the week.
Hey, thanks.
And we'll see you guys around.
All right.
Take care, guys.
Thanks, guys.